After an interview with Jake Claver, American model shares potential XRP role in Japan's $4.5 trillion reverse carry trade. I got a ton of new information that I dragged up. I also took some older clips of Jake to really put this into perspective and clear detail for you. And I'll give you all of my thoughts and opinions as we go through this information. This website has so many ads, so I put this entire article in Word because I cannot stand to look at this thing. So let's just go through this article and then I'll get into all this information. So in a recent X post, this person's name is Teresi, said she believes XRP matches the type of fast and programmable system that the financial infrastructure of today needs. She called attention to the guidance from the Bank of International Settlements, which says an effective settlement asset should turn over 8 to 10 times a day so banks can avoid holding slow-moving currency. Teresi argued that newer systems focused on speed, and she sees XRP meeting that requirement with SBI Remit in Japan already using it for faster cross-border payments. According to the model, XRP design allows it to move far faster than the BIS benchmark. After watching an analysis from crypto educator Lewis Jackson, she raised an important question. If trillions begin crossing borders and the reverse carry trade unwinds, what kind of transaction speed will regulators expect from a bridge asset like XRP? What is the carry trade? So we've talked about this in detail, but let's just catch you up if this is your first video. For context, Jackson highlighted the entire situation in a recent podcast video. During his commentary, he discussed how a carry trade works using a simple example. Specifically, a person could borrow $100,000 in a country offering 0% interest, convert the funds into their own currency, and invest in a 5% return. After 1 year, that investor would owe about $100,000 because that's 0%, but the investment would produce $105,000, leaving $5,000 in profit. Jackson explained that the Japan enabled this type of strategy for more than 20 years because the Bank of Japan cut rates to zero in 1999 and held those level for years, and even pushed rates negative in 2016, which effectively paid people to borrow money. Man, could we get some of that right now? He noted that this environment created what the market calls the yen carry trade. Ministry of Finance data places the size of the trade between 4.2 and 4.5 trillion, with major global banks and financial institutions taking part. The Bank for International Settlements documented this activity as well. However, everything has changed on March 19, 2024, when the Bank of Japan ended its negative rate error and raised its benchmark to 0.01. Jackson said that the small move created a major concern because investors feared more rate hikes could follow. Notably, higher rates would erase the profit potential of carry trades. So many traders started to unwind their positions. This led to the reverse carry trade. He estimated that roughly 40% of the trade has already been reversed, leaving 60% still active. The remaining portion could strain the system if it unwinds too quickly. And then Jackson did explain why some people in the crypto community believe XRP could help. For context, reversing a carry trade at this scale requires fast and reliable currency conversion, and traditional rails often move slowly and cost a lot. According to him, XRP offers a quicker, cheaper, and more secure way for value to move across borders. He highlighted that Japan's long relationship with XRP, specifically SBI Remit, uses XRP for payment routes between Japan and the Philippines and Japan and Indonesia. Also, Japanese institutions maintain long-running partnerships with Ripple, which gives them the theory more weight. Jackson noted that he studied BIS documents, Japanese regulator materials, and SBI Remit's integrations, and confirmed the major details behind the reverse carry trade storyline all come from established sources. He then called the attention of the discussions over how XRP's price might react if the flows ran through the asset, with some predicting price surges into the thousands. While Jackson does not support any specific prediction, he said Japan's policy shift, the scale of the unwind, and XRP's presence in the country create a setup that deserves serious attention. So there is the article here from, what is this? Coinbasic. All right. Now, here is Jake, reverse carry trade, what smart money is doing right now in crypto. Check us out.
You're already starting to see people start to divest from positions, selling into volume. The smart money is starting to get out because they see the writing on the wall. I know a family office, we work with them. They're worth about $400 million. And they alluded to this earlier today. They are hearing whispers, talking to people that have borrowed money, that are exiting those positions carefully, not to cause alarm, and looking to repay those loans expeditiously. Now, when it becomes known that everybody is concerned about this, it will become a self-fulfilling prophecy.
It will become a self-fulfilling prophecy. And so here is the person that the article was written about. I really don't know who she is, but she just interviewed Jake Claver, and I guess she'd watched Crypto Jackson's or Lewis Jackson. Sorry, Levi, Lewis, two different people in the XRP space. I get them confused sometimes. So what is XRP's role in the carry trade unwinding? I wanted to get a little bit more information on this. XRP's role in the carry trade unwind is as a potential high-speed neutral bridge asset that can help recycle capital and FX flows more efficiently. But it is not the only solution and is not strictly required for an orderly unwind. So here is this was the thing that I was thinking, right? Yes, the carry trade is unwinding, but does that automatically mean XRP is going to fill the role, right? I think it's there in case they need it, but they're going to try every other avenue, I think, before they do that, because once you announce the new system, then the cat's out of the bag, right? If the Bank of Japan comes out and says we're going to be using XRP to, unwind the carry trade and do all of these things, the entire world finds out about XRP instantaneously. Don't you think institutions and ETF providers and all these people want more time to buy as much XRP as they can? So I get that XRP's use here fits exactly what Japan needs, but there's also some other things that I wanted to bring up in this video and show you. All right. Historically, carry trade stress has been handled mainly through central bank policy shifts, liquidity backstops, and positioning deleveraging in traditional markets, not via crypto. So we already talked about how the carry trade unwinds, XRP's plausible role in the reverse and unwind. In large reverse yen carry trade, huge amounts of foreign assets ultimately need to be converted back to the Japanese yen, which stresses existing FX and payment rails. The XRPL's design and XRP's use case position it as a bridge asset for rapid cross-border FX settlement and is already used in Japan via SBI Remit and for corridors like Japan, Philippines, and Japan, Indonesia. In theory, routing some of the unwind flows through a high-velocity bridge asset that can turn over many times per day, consistent with the Bank of International Settlements guidance, and efficient settlement assets could reduce the need for banks to sit on large piles of slow-moving currency and can help smooth intraday liquidity. So it is built perfectly for this exact situation. Why XRP is not the only solution. You start to think here, did Yoshitaka Kitao know years ago that they were eventually going to need something like XRP? You would think, right? Being one of the biggest banking conglomerates in Japan and having connections to the government, he probably is looking, his team is looking 10, 20, 50 years out on the economy, right? And so I would imagine that was one of the reasons that they obviously invested in Ripple and XRP in the early days. And now that's kind of self-fulfilling. Why XRP is not the only solution. So this is what I wanted to better understand. What else could there be? Even if XRP scales as a bridge, the core risk in carry, unwind, and leverage duration and currency mismatch are correlated de-risking, which are macro structural rather than purely payments plumbing problems. Other tools that can address these issues include deleveraging and tighter risk limits by hedge funds and brokers to prevent forced liquidations and margin cascades, better collateral and margin frameworks at CCPs and prime brokers so that shocks do not force indiscriminate selling across assets, enhance FX swaps and repo liquidity lines between central banks to support funding is key in key currencies. When the carry trade reverse, improve tokenized or real-time gross linked settlement systems, including but not limited to XRP style rails. So obviously they would use XRP if they went to that next bullet, right? And then what has been done in the past when carry trade, when we've had similar issues, past yen carry trade events, 1990, 2008, and looks like beginning August here episode were managed by combinations of market adjustments and policy intervention rather than any single magic bullet asset. Central banks adjusting policy rates, FX inversion, or signaling to stabilize the funding currency and volatility. Central banks and regulators monitoring a leverage and who needed loosening and tightening of liquidity and collateral requirements to avoid disorderly liquidations. A little bit of the stuff we read already. And market participants voluntarily cutting leverage carry exposures, re-hedging FX risk, and reallocating from higher beta assets, for example, US monumentum stocks. So let me just keep going here with a little bit more, Jake, and then I want to check in with where the Bank of Japan is with their CBDC, because Jake said that is one of the key pieces that the Bank of Japan is going to need when using XRP in this situation.
If you would go listen to my domino theory videos, I explain exactly step by step how the reverse carry trade would lead to the appreciation of XRP. Mainly, there's going to be huge unrealized losses on the back end of the stock market for the Bitcoin ETFs, and they won't have any other assets to be able to pull from to cure those losses. At this point, Bitcoin for sure has systemic risk because of all the pension funds and other hedge funds and large wealth managers and other people that have made large allocations to it.
So basically, Jake's betting against Bitcoin here, right? He's saying that all of these large institutions and hedge funds and ETFs put all of this money into Bitcoin, maybe using some of this carry trade money, and that money is going to need to be unwound, and Bitcoin is going to, obviously go down. Also, USDT is connected here because USDT has some of their reserves and a lot of their reserves in US treasuries, as well as Bitcoin and other risk assets. And so if something happened to Bitcoin and treasuries at the same time, that could be catastrophic for USDT. If it even depegs a little bit, the panic in the market could be just insane. I don't think people know what a black swan event is. Tether depegging and that collapsing, that would be the biggest black swan event, I think, in crypto history. That would, because everything is tied to USDT or USDC. That's what you trade against on almost every pair in the market on exchanges. And so if you lose $185 billion stablecoin, the market is going to feel it instantaneously. Be prepared for that in case something like that should happen. Obviously, there's a lot of smart people in back rooms, on computers trying to make sure these things don't. But Tether's risk is just getting worse and worse. The S&P just lowered their rating on Tether from 4 to 5, 5 being the very worst rating that you can get. And so you start to wonder, are there cracks in the system? Why haven't they given us an audit since 2014? And what are they actually hiding? Bo Hines, that's for you, bud. You're there. Show us that you guys have the money, please. All right, Brad Garlinghouse hinting at Ripple stablecoin in Japan. Here's another thing that would need to happen, and it is coming.
So if you're imagining a stablecoin in Japan, what's the time frame?
Well, I think right now, Ripple in particular is focused on let's get live with the US dollar stablecoin. But I think there will be, people will want to hold yen stablecoins, and I think that's only a matter of time. And I think the regulators here in Japan, again, about a year ago, passed some legislation around that, and there's some companies going through the licensing process right now to get live.
Okay, and then
the reverse carry trade many times and how it could happen by the end of year. But if it doesn't in that time frame, do you believe it's still in play in 2026, 3 to 4 digit stacks? Yeah, for sure. I don't know how much more confident I can show you guys I am. We've got 4 months left, September, October, November, December. A third of the year left, and everybody's losing their minds that it hasn't moved.
1 month left.
Past $3 left, yeah. And it's not going to be a gradual thing. When this thing goes, it's going to be a vertical line to the upside because of the supply shock that's going to happen. One of the things I found out at SALT that I thought was very interesting, but one of the ETF issuers that would have had lots of conversations with the SEC for issuing ETFs because they've, filed multiple S1s for multiple assets, mentioned that futures markets need to be live for at least 6 months before the SEC is going to approve the ETFs. So that makes sense for a lot of the delays that we've seen. They felt like Litecoin ETFs would probably get approved first, then Solana, and then HBAR, and then XRP later in October. I don't know that I'm super confident in that exact order and time frame, but they did say that October is when all of those futures markets would be around for 6 months, and those things would probably get passed. So again, I haven't issued an ETF. I haven't talked to the SEC about it. This person has had numerous conversations with the SEC about it. So I'm going to take their word for it. That makes sense to me. And again, all of these futures markets, even if they were launched on Coinbase and not the CME, they count basically. And so with that said, do we have to wait till October for the XRP ETFs? Possible. Do we, top out and then pull back and go into the bear market before they roll those? Possible. We'll see what happens. But with the rate drop here in the US on Polymarket looking like it's an absolute certainty, and also the Bank of Japan looking like it's going to raise interest rates, that reverse carry trade that seems pretty likely that it's going to unwind at scale in the not too very distant future. It is an inevitability.
And Jake is already on X, kind of like the I told you so tweets, right? So he believes that this is all about to take place, and XRP's role as the global bridge currency will be the solution to Japan's worries and, of course, fix the current global situation. Now, that would be incredible for all of us because we would be entering a new asset class ourselves, right? A new tax bracket. There's a few other things, though, we need to get through, right? I need to play 2 more clips, I know, and then I need to give you some additional information on Japan CBDC. So now another part of the carry trade unwinding in Japan is going to be stable coins and treasuries being dumped on the open market. Now that we have the Genius Act, are we going to have enough demand for stablecoin companies to buy the treasuries that are going to be dumped from the carry trade unwinding? And Jake does break this down right here.
How will the reverse carry trade affect the stock market so I can understand how to protect those assets? Thanks for all that you do. There's a reason Warren Buffett has got almost $400 billion on the sideline right now. It's going to decimate markets. It's going to be limit down, limit down, limit down when this happens. $10 trillion that gets sucked out of markets globally across the board. Gold, bonds, treasuries, stocks, real estate, doesn't matter, all going down when this happens. Because people are going to be selling as much as they can to swap back to the currency that they bought it in, swap it back to yen to be able to repay those loans. Treasuries are going to be fine because they've already backstopped it with the Genius Act and that bill. There's going to be enough demand for domestic issuance of stable coins to be able to buy up all the treasuries that are dumped on the market by foreign entities and other individuals.
All right, so just to give you the information on this, right now we've seen about $300 billion in stablecoin demand that's currently in the market, USDT, USDC, and all of the other ones, RLUSD. So you got about 300 billion to 305 billion. There's probably going to be somewhere around maybe 900 billion, maybe $1 trillion worth of treasuries that are going to be sold. And so you're hoping that these stablecoin companies are at a place where they can absorb this 900 billion or this 600 billion worth of supply that's going to be rushed on the market. If those two things are not aligned perfectly, then we could be in trouble, right? And that's why Scott Bessent, the Treasurer of the United States, said he believes that the stablecoin market will grow between 2 to 3 trillion over the next few years. The reason is because he knows this is about to unwind, okay? Now, last point here, Japan needs to have their CBDC ready for all of this to unwind. Let me just show you.
Let's get into what would actually need to take place for this to happen. You got SBI and the Bank of Japan. They would have to have strategic alignment. And we know SBI is Japan's largest and most aggressive fintech institution. And they own part of Ripple. So they operate SBI VC trading, and they also use XRP for live FX remittance. The Bank of Japan is developing a CBDC, which has been in pilot since late 2023, maybe 24. And this would allow them to program the stability of the bond market. But they would definitely need a playbook for this. You'd have to route through XRP. You'd have to be able to issue or go live with that digital yen. You'd have to offer yield or rewards for people holding the bonds, and then absorb capital inflows without destabilizing the yen or bonds. Okay, so this is a tricky dance. It's not like it's an easy thing to do, but if you had a liquidity buffer like XRP that could expand and contract to be able to mitigate this risk and volatility, it's going to be much easier to handle this situation when it happens.
Okay, and so here is the information on the Japan CBDC. Now, the final pieces here are Japan CBDC and Ripple's RLUSD. So let's find out what's happening with those two things. The Bank of Japan launched a formal CBDC proofs of concept in 2021 and 2023 and moved into a pilot program in April 2023, focusing on technical evaluation and ecosystem design with private intermediaries. Private intermediaries. Who could those be? Official documents emphasize that the pilot is to keep Japan ready for issuance rather than to signal a decision. And at the latest updates, there is no committed date or even a year for public rollout of the digital yen. Japan's finance ministry and Bank of Japan continue to joint policy work and experiments, but public communications frame any decision to issue a CBDC as contingent on political approval and further study of impacts on banks and competition. Practically, this means thinking in terms of later this decade rather than a lock launch window for 2026 and 2027. So this is one of those things that might not be lining up. Could it be ready to go in the background? Yes, but we have nothing that we can point to say they're ready to go. That is also something that's like a red flag here. One of the pieces that are not quite in place yet, or at least that we don't know that they are in place. Now, RLUSD is planned to go live in Q1 of 2026. That's interesting timing too. That is also one of the pieces that is going to be vitally important here. And you see other stablecoins launching in other currencies around the world. We had a Euro-backed stablecoin launch on the XRP ledger a few months ago. There's a Brazilian real-backed stablecoin launched on the XRP ledger. There's just going to be there's a Singapore dollar. And you're going to have all of these other currencies and XRP as the bridge in between all of these currencies. So the infrastructure is there. The time is there. Is this all going to play out in the XRP community's favor? That is the question that we are all going to be sitting on the edge of our seats and hoping and praying that Jake has been right this whole time, because if it doesn't go this way, man, that's going to be rough. All right, guys, I'll leave it with you. I hope you learned something. If you did, you can like the video, share the video, leave a comment down below on what you think is about to happen. I'm Crypto Sensei. I'll see you next time.